Hi, it's Brian Decker with your Market Minute. I wanted to talk to you about the bank failures that are recently happening and how you can protect yourself from it. And also assure you that it looks like from the news coming out that Silicon Valley Bank was heavy into startups, high technology. And when technology taking a big hit with interest rates going up, that really, their asset base was concentrated. It wasn't diversified. It wasn't broad-based. And so it hit them and took them out. They put a lot of money into treasuries, long-term treasuries. This makes no sense. In August of 2020, when interest rates were under 0.5% on the 10-year treasury, they went long. So when interest rates went up, that hit their asset base. Plus, when the new startups really dried up last year when the markets were coming down, that was a 1, 2, 3 punch and took Silicon Valley Bank out. Signature Bank was closed 2 days later, Sunday of this week, and Silvergate Bank also voluntarily closed. Those two banks, Signature Bank and Silvergate Bank, they had heavy crypto exposure, not a broad diversified asset base, and so they also closed because they weren't diversified, and their asset base took a major hit. Cryptos have been down close to 70% in the last year. These are unusual situations. The big banks are in very good shape. I wish I could show a chart of their asset base, their deposits, the loans they have out, the loan to value, the exposure they have. Very low risk right now. The banks are in good shape. However, if you're invested in a small neighborhood bank, I hope that you use caution and stay within the $250,000 FDIC limits on your CDs, and just know that you have $250 per account. Now, if you're married or significant other has an account, $250 for you, $250 for the other. You can't do a Brian Decker account number 1 for $250, Brian Decker account number 2 for $250. Doesn't work that way. They have to be different accounts: a trust, an IRA, a SEP, a Roth. They have to be different accounts to count for that $250. Also, when you put your $250 in a CD, don't put $250 in, put $235 so that you get the interest. If that bank goes under, then you get your principal plus the interest. If you put $250 in and the bank happens to go under, if you're worried about that, you don't get any interest. Yeah, you get your $250 back, but you don't get any interest. So this is Brian Decker, just with being careful with smaller banks in this time. We do expect that the economy may go into recession, so it's just prudent to exercise caution that way.